So I have here the daily Forex market, and I've got horizontal lines set at 50 pips apart. So if I take, if I'm going to trade with the stops this tight on every currency pair, um, so like this, and so you can see real quickly that you can't get near the ATR of the pound or the yen right now. So if you're a trend continuation trader, which those guys over there at Empowered Trading claim they are, why don't they just take a simple setup for their entry? Why do they have all these wackadoodle patterns? It just blows my mind. So they're trading the yen, say, right? So what if we just took a trend line here on the daily, and we got a trend line here. We could buy right here at the break of the trend line, or we could get in on the first trend line break, which is hidden inside here. Of course, this is gonna be more adaptive than any moving average on the planet because you keep drawing these things, and they keep changing. Like this move down here, trend line break there, and for the scalpers, I think they're going to be getting in on something like trend line break here. So the scalpers are going to run it up into, and it comes right back into this window. If you turn on the candle wicks, you'll see that you definitely got filled if you had sell limits up there. You can't see it on here. So, but if you imagine you put your sell limit here at the low, literally, you filled here, even though it doesn't look like it on closing prices. But if they were limit orders, you were tagged and bagged on that. And if your target was outlandish, which it didn't have to be, it could have just been a projection off the lows. So as the momentum is projecting, um, so yeah, buy the rumor, sell the fact. So here is the projection of the bears is off of this low, and they're pretty good projection. Just the simplest in the world, simplest trade in the world. Now here's the internal. I guess it's like Andrew's Pitchfork, but a bet pitchfork. Andrew's Pitchfork trading, which is the most profitable trading for trading. Really, it is the most profitable if you're going to analyze the market in some kind of system like that. Still waiting for this DM market to set up. Why don't these markets just get to where they're going already? What I've always wondered is why, if you think it's just you're looking at stupidity. I think this is the most frustrating thing about trading. When you look at the market, you're like, well, why don't these assholes just buy? It's going up, right? In other words, how long is it going to tread water? That's an old joke. How long can you tread water? But this treading water thing, now, if you take into account every zigzag on here, then you can see the whole story. You can see where all the traps are. You don't need to have all that crap on the screen. This is a bottom here on the daily, according to this broker, where they trap them, and this bottom, this is supposed to become resistance, and it does for a little bit there. I was watching the 5-minute euro when they caved into the historical prices. I was watching the 5-minute on a 5-pip grid, and believe it or not, they take it right to the edge there. Then it goes up 5, and I thought, nah, it's going to tank right now because they only gave it a 5-pip pullback before they smashed the euro. I don't know if anybody watched the crush of the euro dollar through the floor. But, of course, buyers came in like a whore, so it's a great swing trade because we hit the 100, we hit the 50, we hit the 100, and if you're sitting there when it's crushing down, there's plenty of bombastic up and down. You can either be buying or selling. But that climax to the downside was pretty frantic. You kind of had to hit it and quit it there. You're only talking about 2-hour reversal below the 140. So that was a great. I think we're going to come right back to where the floor dropped out here. So we can come back all the way to the floor. Very high probability. Just going to finish off where we fell through the floor, somewhere in there. Look at this. Look at this trend line system. Now, granted, this is going to take more work because you'd have to keep, or you just save these charts, right? Save it as an image or something. I guess if you have a trading journal, that kind of stuff. I hate that. Somebody said once, "Oh, to do it, keep a trading journal." I thought, God, I just drew a trend line. I'm tired. I trade. Fuck your trading journal. I can just see I blew the account up. What do you fucking think? I'm retarded? I hate that trading journal shit. Here, just look at the horizontal price on close. In if even I guess. Oh, geez, the thing is, people get so complicated with the trading thing, and it's astounding, isn't it? How complicated people want to make it. How you need so much stuff to do it. If you gave a musician a instrument with one note or one string, they could cut a tune out of that. It shouldn't be impossible for you to take advantage of natural, just a simple system, right? Now, the trend lines, this, all you need to do is find peaks and valleys. If I just gave somebody the simple instruction set, I go find peaks and valleys and put a horizontal line on every peak and valley you see. And I have just the 50 pip grid here for reference of how much it would cost to take each trade. 50 pip swings, 50 pip trades, presupposing you have the patience to wait for the fucking setup and all that nonsense. But is this a new low? Is this a low on the daily from last month? Yeah. Is that a great place to buy? Yeah. Now, do they take it through the floor there? And if you put all those lines on there, that's a major one that jumps out, right? Go to the next major one that jumps out. Well, that's crazy. You mean to tell me this little triangle up here became where they took it to? And look where it dojied out at over here. Now, this is just like the 5-minute chart that I saw. Instead of being 50 pip grid, this is the same scenario where you break out, you pull back just a little bit, and it's actually pulling back to that closing price. And can you find the trend? This is your first shallow uptrend. Now, this is where moving averages are never going to get this because they're still looking at this is divergence from this flat line. That's divergence. You don't need the other stuff. And if you're really into all that mystical stuff, take this line. This is a magic trick. Take this line and copy it to that peak. And then, or make it precision right to the top. Now copy that over. Hold down the control key. Highlight this tool. And make multiple copies of that. And you'll see that's a great reference for the rate of change of this thing, or the crossover. Instead of moving average crossover, trendline crossover. You break out, you pull back. This is the transverse index that I was telling you about. It's top secret right now. But here's another amazing breakout, pullback, breakout, pullback, breakout off the races. This is also the same rate of change of that sloping back of that notch. It goes flat. This is doji to doji to doji. If you had a buy limit right here, the question is, would you have gotten filled? So if you place all your orders based on closing prices without regard to the wicks and all that nonsense, not to be unconcerned with the ATR, but there's no accounting for a giant wick. Well, there is, but I mean, if your orders are there, so you can kind of test your system. The only back testing involved in this naked trading is that you turn the candles on just to see what really happened. So here you would not have got filled. But look at this monster fuck. Now, you tell me, we're on God's green earth. Now, if you said to me, well, why'd you buy at this low? What's the reason for that trade? Now, you guys like creating a journal. in hindsight. It's like those people, these people that say, well, you just have to rewrite, you fucked up all those other trades. You got to rewrite your past and just go with a made up future, even if it's bullshit, just so that you can convince yourself, right, that it's okay. It's okay to screw stuff up. Okay, so here it is. Yeah, horizontal lines. Why would you buy here before this big run up? What could that possibly be a good reason to get in here? There's a couple reasons there, I think. If you leave it up to you just manually coming in here, which is a real bitch because you got to keep putting that on. But look at this thing dojing out here. It's reflecting off of this. It's not reflecting off of Fibonacci because the market is its own fucking Fibonacci. It's just not the Fibonacci you want to see. People want to see a perfect world. They want a perfect this, and they build a perfect that. And look at this compression level here. I'm sure that is some fib ratio. If you took this to this to this, but the golden ratio is living in this little subtle zone down here. And this window is psycho head and shoulders territory, right? Do you really need inverted head and shoulders, of course, but shoulder, head, shoulder with almost a perfect cycle width to it. Pretty fucking easy. Pretty stupid. Top. This is the big argument zone constantly in here. And this bottom does become a top here. Amazingly, this is the shoot back zone. Here again, attempts to pull back off that, starting to fail. Now, if you have a trend line, of course, if you drew, it'd be great to have an auto trend line drawer that does all this for you. I guess that'd be the ultimate. Does it take into account every top becoming a bottom on this? If right here, these flat spots, these dojis, look how this complete, utter, and I would say it does have a organic look to it. It really is the market. This top compared to this top, I mean, now it's going to look like a big mess, but where are you going to sell? On the shoulder? After this is the head, this is the shoulder. You have to assume that when the market rallies back up into a flat spot, which is a doji, that's an entry point. It's plain as day. You're really supposed to use a cloud system on the yen, though. Now, if you extend it out here, you get in there. The early traders are going to get in here. The people that trade the first breakout, they get in here. They get a better price. This is why you see with the Gann fan. People have a Gann fan, but the market is its own Gann fan. So here is this trend line here. And if you kept hanging everything off of that one, so you copy that over, and I'm just going to start over there. I guess it's too much on there. So you'd have this. So you have this perfect confluence here where you have a top become a double bottom in momentum. That's truly amazing, right? Now, is that happening because of some type of magic? Or is that just a great place to get in horizontally speaking? I always wonder about that. Now, this top becomes a double bottom here. Are you trading that ricochet off there? If you loaded the wagon on this, you kind of got killed. So, of course, this is the one that this is the third touch, so you know these two exist. If your entry is going to be off of this, well, it'd probably be off of that anyways, because you got a double bottom. That's the first bottom. Even if you bought there, you have to survive that pullback. When they stop into this thing, they stop into that triangle like that, and they fill this thing. Wow, talk about an entry. You could have scalped to this and let the rest ride. Now that'd be one hell of a giant trade plan. I mean, your trade plan would just be monstrous. You'd be like, Oh my God, you got targets that are 1,000 pips. I mean, are you serious? Like, you scalp this first. I mean, that'd be a lot to manage. You need a team of people to decide that you're going to, how you're going to actually load the wagon here, um, load the wagon at this price, scalp to here. You got stops in here, got stops in there, and then you can let the rest of that trade go. You know, it's pretty crazy. Or you're going to buy a breakout here, confirmation, right? Oh, some people are waiting for a breakout of this confirmation. Oh, we went long. You know, it's great until you went long here. And definitely complete crazy climax there. I think that thing's beat. I think it's done. Put a fork in it. And if you go to the smaller time frames, you know, there's a million trades in there. But I don't get the complexity worship. And here's the classic. You see this in the yen a million times a Tuesday. Top become a bottom. And I'm sure inside of here, the same thing lives in there. A 4-hour version of that or a 1-hour version of that. Same dumbass trades, same dumbass days. And these, you know, you could, anytime the market goes sideways, you know, it's gone sideways, trap those bulls, rip them back, and then even worse than that, just they're along the train here. Don't forget the breakout traders got in here. The doji, 2 dojis below the floor, you're long. Oh, everything's great, man. That's a great fucking system. My target's up here. You better take that target because kablamo. And let's just go in there and dip into there and just crush everybody's dreams. Everybody's hopes and dreams are crushed. And so even here, this doji, if you bought here and you put your stop below here, they kind of trapped you and took you along for the ride. Same thing here. So just because you have a doji doesn't mean you don't want to buy on the smash backs. So all the wicks, you're going to buy the wick. So you're not going to, wait for some ridiculous. I wouldn't wait for a ridiculous confirmation thing. You'd have to have more than one order in there because look at this bounce up here, just before the smash down. So you want to get in on the wick for sure. That is definitely the name of the game on the daily, is to enter on the wick, not on this breakout stuff, because you get whiplash. You could, I guess, a couple breakouts, but the wick is going to make so much money. Like here, 4-hour chart wicks. This is a 30 pip wick. If you're buying this smash up before you go, you could have just cashed out of something on the wick only. Same thing here. Above the 50 are the wicks, and top becomes bottom. And you really don't get filled there. You'd have to have that. Would be the only time a stop would make sense. You'd have a low risk entry. Here they would have stopped you out. They would have chopped you up. So you have to be buy and sell on that. Look at sideways. Slow drip down. One last kickback before it goes up. Same story, different day. Pick any currency. Same story, different day. British pound. It looks like a good place to put a line. Here's resistance. Here's the monster trend line. So you broke that. Of course, people are feeding off that trend line. There's some great daily touches on that. I think that's painfully obvious. So just clear cut, instant adapting. Look at this big smash. Wow. Then we fill this so you can see all the holes easier. Once you put the trend line, you can see the big vacuum. So this big vacuum away from the trend line. So they press down into that, comes back. Not to mention all these just silly swing trades in here. This is a whole... before we march up to... just nothing ever happens. So the path of least resistance, which I heard that once and I thought, well, that's retarded this a few years ago. I'm like, path of least resistance? What are you talking about? Certainly, if there's no resistance here, the longer it goes sideways and then down. So now we weaseled away from this trend line, going sideways. There's always going to be the great limit order grid entry here. That's always going to be a great trade, or just whatever time frame, whatever you got time for. So if you went to the, say, 1 hour chart, you'd say, let's buy here. And I know this is a controversial trading technique, is to buy support. So you have a buy limit because of this low. And if you turn on the candles to see, well, how wide of a stop did you need to do that trade? And actually, that's like a perfect entry. If your stop was based on this candle, that's about as good as it gets. You're buying support, you're selling resistance. You can make all sorts of speculations on the next thing that's going to happen, but in the end, it's simply about support and resistance and waiting for, this is the part I find difficult, is waiting for the fill. And I guess if you've got enough currencies going that you're juggling enough drama that you can place all those pendings and walk away. For instance, if you kept on placing an order at the 50-yard line here with a stop of, say, 30 pips, you know, you're a fucking genius. You're making 20, you're making whatever, but the feeding line is a 50. Until it's not, of course, it would blow you out here. But hopefully you made enough money off of this bounce, and here's a 50, almost 70 pip winner. And let's hope there you got sell limits up here. Sell limits because it is the 50 with the 25 stop. So you just have those spaced out. And as long as you have your sell limits here right now, for a kickback of this much, sell limits at this 50, looks like a good place to sell at the 50. Why wouldn't this be a good place to scalp or sell? I can't imagine. I don't know why people want to make trading so difficult. What is wrong with buying support and selling resistance? People say, well, you got stopped out. Yeah, but I know. But I mean, I bought here. Maybe I sold here, too. If you have a bi-directional system, buy. These aren't the best bounces off of here, but you're not expecting, hopefully not expecting this move, or even if you're selling, expecting this move right now unless news is coming out. So this is either the accumulation or distribution until, say, news comes out. But here's sideways drama, and here's the kickback. So if you're going to buy, this is the 25-yard line. And I guess you have to just kind of picture the trade before it happens. Like you have sells here, and you're going to exit here. So you're going to trade this gap, this backfill gap. Market pops up, and that's that trade. Or you're getting in now for the ride up. You're going to buy at the market right now as this breaks out. So this is potentially right now they're trapping people on the British pound. But what if they're not? What if this really is going to break out? Because where's the floor that the pound's trying to get back to? Triple bottom becomes a double top. And that's pretty amazing. 150 pips smash down in one day. 50 pip bounce, 50 pip, 50 pip, 50 pip. You must sell here. So right here for a scalp down to say here, a lot of orders. So I put a stop up on this. Say here. So that'd be the back thing, and then you have the buy limits constantly riding down here in case we smash down here, and then the exit for that trade is going to be the last known floor. So for some reason, the market should go smashing through the floor like it did here. The trade is to buy at the 50 and ride it back to the floor. And now you would say, can I say that, holy shit, this thing is going down? Like, can you flip and say, oh, that's obviously the pivot. Maybe we should sell there, make another 50, and maybe not even get in. Maybe buy at this 50 and ride it to this 50. So this idea of trend is bullshit. I know it's going down. But unless you sold here, you didn't really, like, if you're going to sell in a break out of this, okay, right? But didn't you want to sell up here where they trapped all the bulls in that last run? So who's getting trapped? Where's the next cluster of business going to take place? In this 50 pip range here. So this is the business zone, right? This is the teller window for the bank. This teller window goes on like, look at this, come on. 2 days, you got 2 days. 2 days of nonsense. Kickback, punch. Pull back drift, very narrow. Trap the bears a little bit there. Here's the vacuum form. There's the hole forming as it comes. This is the duck bill trade, the beak trade. And it just spits out another thing. Double top. Geez, should we sell up here? Gosh, I don't know. Gee willikers. Why so complicated? I guess we love it. You know, we love this complicated thing, because if it was simple, everybody'd do it. I know. That's why it's just it's so hilarious. And if anybody ever old enough to remember EST, E-S-T, yeah, I went to see this shrink once because I was losing my mind, and she said, "Oh, I went to EST," and they would say, "Do you get it?" And if you said you got it, he's like, "Yeah, I get it. I get it." It's like, it's that stupid. You mean I just paid? Or I just went to a meeting and spent like 8 hours for you to tell me that things are what they are. Oh, just deal with it. Okay, I got that. Yeah. And but where's the magic pill? No, there's just no. And then they would suggest you do something like meditate. I'm like, what? And give myself an anxiety attack? What are you, fucking nuts? That's all I need. But yeah, this stuff here, a 1 hour chart. Come on, stop with the Gartley. Naked trading. Just take clothes off, drill down, look at the 1 hour chart, right? If you gotta go back here. How many days are we going back? Here's the euro versus yen. Top, we go bottom. Gee, I wonder if this is support at the 25-yard line. Now for this currency, the way it trades, if you want to trade with 25 to make the 25, and it just keeps feeding off there. If you're selling up here, you're taking some heat. These are definitely spikier moves. If you're getting in on a 1 hour, of course here you're probably looking at like a half hour price pulse or something. You're just going to buy because it just sold off 50 pips. Getting in on that, you know, it's in an uptrend, obviously, right? And of course, people would say, well, if you waited long enough, see, just because it went sideways and blew your account up, don't mind that. See, you got to go to a higher time frame, buddy. That's your problem. Yeah. Okay. So I go to the 4 hour. Well, 4 hour here is a whole different world. You know, all these entries are painfully obvious. Let's hope, right? Is this a top? Is this the top? 50-yard line entries, 50 pip tickets. First target's 50 pips. Maybe you get on that pullback. If you're only taking 50 pips, you know, It's not too hard of life. Here you could have made 150, but of course you would have had to wait for like a couple days here for this wedge to form. Look at this cycle pull back and retest this window. So you put a cluster in here. Targets are here, your stops 50 pips. You have all these clustered targets in here. Or you just have, you could make it so, well, you could do anything, right? Given enough time, placing orders at the 50-yard line. And if you have orders here at the 50-yard line because of this and they blow you out, so what? You have a 10 pip stop on that. You have a 15 pip stop, a 20, 100 pip stop. If you had a 100 pip stop, you just add it to your position. Now you're just in a little bit more. That's all. Same story, different day. Okay, they're trapping all these, scalping out of this euro dollar. 104.64. Wow. Sellers are coming in there. Psycho move on this euro. So how about that euro? How about that poor euro dollar? These projections off of that, not kind of failing to meet expectations on that. So yeah, no biggie. We went through the floor there. Big frantic crush down. Big conspiratorial move here. Nice 2 days down hard. Euro dollar. So did they trap all these hedge funds? They trap them down there. Hedge fund. I'll give you a hedge fund. People talking about hedge funds. I'm like, okay, so yeah, this look at that. Look at that euro dollar. Back there for that trade. Boom. Sideways. Oh, trap these guys. Oh, I think we trapped the bears now. Oh boy, take it back to here. Get out. Or maybe it is going to keep going down. So if you go to the 4-hour, oh boy, look at this beautiful, just stupid volatility breakout entry. Don't get much dumber than this. So even if you had a trailing buy stop, your first fill was here. Nice thing about the euro dollar, it's lots of just look at these scalp reversals. If you have a grid running in front here, you could be counter trend trading that. It's kind of hard to. You'd have to wait for this doji to get short right in here. That was your only chance, really, was this pause here to do a breakout strategy, or it would just kick in, hopefully. And of course here it's just about buying on that 50, buying on that 50, buying on that 25, just throwing in a grid there. Here it's about, you know what, 2 dojis, 8 hours, 8-hour doji, holy shit. Put in a hedge here maybe. Here's the hedge funds come in. Same thing here. Same thing here, of course, you'd only make the money on that. Here's 2 gravestones. So it's what do you do with these candles? Of course, here's the clothesline, which is really it's bizarre to see it on top of the candles and make the story of what the doji, but the doji is just a flag. It's like a node, I think, carried forward. It becomes the top that becomes the internal bottom, supposed to hold. So if this theory of top become bottom is supposed to hold, then the market would eventually weasel its way up to here and close that gap, or we're just going to keep, this is going to doji out and it's just going to go down for maybe one more pullback, or maybe it's going to come down here, but you don't know. So you got grids laid in here. And you're like, okay, let's just put grids in here. And if we do get that plunge and we get this, what's wrong with these pips? Why is this pip, these pips no good? Whereas, oh, this is, I followed my system here. I made these pips. Okay, great. But time's marching on. And if I can get a flash crash like this, I'm happy with that trade. This is a 4-hour candle. Even smash down like this, where people are saying, "Holy God, this thing's doomed. It's in a downtrend. Look at the 4 hour. I'm seeing down candles, and it quiets out here, and you just get in. You get in on this doji here. Sell stops are running, buy stops are running. Who fills first? First target's there. Second target is to get out in reverse, because they're going to trap these bulls now and pull it back. And the wick, you see, just selling at the 50 or selling at retest of resistance. It's crazy. I know, it's crazy. I just don't get why it's not socially acceptable to just trade the market. You know, you need to have like the exotic. And who's going to tell you where the market's going? Go to the daily chart. Get this drawing mode here. The daily chart is like, are you kidding me, right? Gee, we're in an uptrend now. I guess so, right? Bullish candle. Could be a possible engulf. Do you want to get in here before it engulfs? I would. But problem is, if I get in right now, I got to put about 100 pip stop on that to survive this wick. Not so good. So I'm thinking, like, you know what? I'll go for these trades on the 1 hour chart. So I've been trolling for these trades. You buy at the 50 and you scalped it here. You sell at the 50, which didn't quite make it. You got sell stops running up in here, say. Here is a buy stop trigger, maybe. Volatility's kind of high here, but if you have buy limits here, selling up into a doji, what's the next trade? Well, painfully obvious. We're going to buy here, and we're going to get out here. We're going to buy here because this is where all the bulls have their stops. So I want to get in. If it's really going up, I'll buy this whole window here. And of course, I would buy next week. I'm going to buy 100 pips deep, 150 pips deep, all along the way. But if I never get that, if I never get the market to do what it's going to do, and you know, these people that have these outlandish things and it doesn't happen, then it's probably going the other way, or it's probably going to happen on a smaller time frame. So why would you want to deny what's really going on? Time frame on the 1 hour chart, if you go out to here, you can see how ridiculous it is to think in terms of, you know, here you're gonna see it easily. That's a 100 pip winning trade off of this 25-yard line. You're up from 25 to the 25. And look at this thing feeding off that 25. So if how you coordinate it off and how tight your stop is, and I guess if you wanted to go all the extra length to put trend lines on there, you don't have to though. Here's an obvious trend line. Here's an obvious just keeps banging on that 50, can't get through it. Just couldn't make it to this 107.50. He just keep banging up on that here. Can't get above the floor that it just took out. It was a big deal when we went rushing through there. You see the amount of drama there. Look at this. Everybody knew about this price, and that's where we just tag it. We actually go up, and then here was where we underneath the floor there. Yeah, you can't see it, but right here, when it on the 5-minute chart, there is a little bit of a it just looks like this, pulls back, and then kabash, straight down. But it's so ridiculous because this is such a monster move here that you had to really see that opportunity, that window of price. And look at that. Look at that astounding cuts through here all in one day, mind you. So we could, look for a big pullback now. Okay, so I'm just into this trade though. To me, this is where the money's at. If you can trade that move, or you can just trade even this move or this move in one day up. You're selling at the 50 to make 50, sell at the 50 to make 25.50, sell again. Buy at the 25 for that move. So it's just up and down, and a 25 pip stop to make 50, say, and a 50 to make 100 or stuff like that. Just really goofy stuff. I don't know if I can imagine having to monitor all the screens with so if you have a button that just lays in a grid there, you'd be like, okay, certainly you're going to take some heat, because if you're going to put a 50 pip stop on there, you're like, yeah, I could be a slob. I just, the problem with putting too tight a stop is they're just going to crush out that trade. Better you trade with a 10 or 15 pip stop at the market, and ride that. Or you could place a 15 pip. It's a lot of effort to place a bunch of orders with tight stops, knowing, manually, if that they probably could take that out like a zipper. If you really think it's a key support or resistance area, a diversity of stops, 15 through 35, say, something like that. And magically, you don't have to be there for the trade, and you just walk away from this shit. The feeding line is support and resistance, and when the market trends, tops become bottoms. When the market's going sideways, it's just torture for the trend traders. So how much percentage do you think this is of the market? This is 80% of the market. This is, to me, is a trend. Here's a great trend. Here's a great trend. Here's a great trend. So you have, and they just like one day, bye-bye. But this is total accumulation under the floor here. Market down, sideways, apparently accumulation for a markup dump, blue light special, come back and still not done dumping. There's a big thing here. So now we have a hole filling here, and can we at some point create enough pressure to burst out of that? Well, in the meantime, I'm content with the 25, 50 pip winners, 75 pips with a 25 pip stop, say, just goofball stuff like that. And of course, the fun of, I guess, putting out your orders there and trying to lasso one of these entries. I think that's the excitement, is to have a grid out here and just walk away and have it totally fill and retrace and just go, you know what? Trading at the market's overrated. I mean, the idea of having to be there for it is not necessary. If you want to maximize how much money, if you want to get in every opportunity, but of course it's psychologically difficult, because when the market's in front of you going crazy, you might be spooked by the volatility. Watching it happen on a 5-minute chart, if you're zoomed in on a 5-minute chart and you see the market spike, you're just going to not be able to, there's nothing you can do about it if you don't have a trade plan for that amount of movement. So if you had your orders already in there, and you're like, yeah, I know this is going to spike, but that's going to come into my fill, and hopefully it's going to smash in and then cash out, and you'll scalp that first burst, and then the rest would be the swing trade, say. I don't know. That's my Forex view.